Okay, Matt, let's wrap it up this week, as always, with one to watch. What stock have you got your eye on this week?
I am kind of turning the tide on this one, and I'm putting Wells Fargo back on my list.
No Bank of America?
Well, they're still my favorite. They're still the biggest bank stock I actually own.
Yeah.
But Wells Fargo is just getting too cheap to ignore at the current price of around $45 a share. That means their buyback program alone is going to amount to about almost 12% of the outstanding shares this year alone. They're just buying back stock hand over fist. The dividend yields up to 4.5%, which is very high for a bank stock. And what's really interesting, if you look at them on a price to book valuation, which is how I generally value bank stocks, you have to look all the way back to 2011 to find a price to book that is where it is now for Wells Fargo. If you look at, say, Bank of America, they've, you only have to go back to 2017 to look to find the same valuation. In JP Morgan's case, they hit their current price to book back in 2018. So Wells Fargo is trading at its lowest valuation in 8 years. And sure, there's some reason for it with the scandals and everything, but does that mean it needs to be trading at the same valuation right as we were coming out of the crisis? Probably not. So there's a point where most stocks become attractive, and Wells Fargo is reaching it in my mind.
Yeah, I like that. I mean, hey, it's always tomorrow, and maybe they're getting their act together. And what's the ticker there?
The ticker is WFC.
Okay, good. This is, for me, I'm just a little bit of a shout to one of our listeners, Joseph Crivelli, who sent an email recently asking about this company, BGC Partners. Ticker is BGCP. And BGC Partners it's a financial services business. It primarily focuses on trade execution and broker dealer services. And so the markets they serve primarily are wholesale financial, energy, insurance. Clients include many of the world's largest banks. And so essentially they're helping, through this brokerage, moving a lot of money around. And most of their revenue is generated by commissions. And I think that could be one of the challenges in these type of brokerage businesses, that commissions tend to come down unless you can offer some type of a specialized service there, a competitive advantage, so to speak. It is worth noting. I mean, their commissions essentially doubled from 2014 to 2018. Total revenue was close to that as well. Now that adjusts for a few transactions along the way, spinoffs and whatnot. But they believe that their technology, they have a hybrid brokerage platform that can accommodate for some more complex and less liquid markets. And that's what they consider to be really one of their advantages. Now, there's some costs that come with that, but, it's still a small cap company. So there could be the potential there for some interesting growth. I think one of the things that maybe holds potential investors back, it does have a bit of a convoluted ownership structure. And, there is, for an example, I mean, Cantor Fitzgerald owns a bit more than 13% of the shares outstanding and essentially owns the majority voting power of the company via Class B shares. So that's something at least to keep in mind there. But an interesting business, and certainly a market that is not going to be going away. And we've seen with some other businesses like this, it can be a very big market opportunity as well. So one I'll learn a little bit more about in the coming weeks. Thanks for the push there, Joseph.